ones that you buy today. So I wouldn't worry about it. I would hold on to it.
All right. Thanks so much. I appreciate it.
Okay. All right. Michael.
Hi, Dr. Joe.
Hi.
I just wanted to ask you something. Any size bottle of perfumes, we don't see any expiry dates, but yet I know that after a while, if you don't use a perfume, the smell isn't the same anymore.
No, for sure. I mean, yeah. No, there's no requirement for expiry dates on perfumes, but you're quite right. And perfumes, of course, are very, very complex chemical entities. There are hundreds of different compounds in perfumes. And the perfumers, of course, are very secretive about exactly how they concoct their products. But certainly some of those compounds are more volatile than others. So as time passes, some of them will evaporate out of the perfume. Then there are other complications whereby oxygen reacts with some of the components of the perfume. So you're quite right, is that with time, the scent of a perfume will change, but no, there's no requirement to put any date on it. First of all, it will be very hard to predict that because it depends on how it's stored and where it is stored. But because there's no risk associated with it, so there's never been any motivation to put it on the label.
Okay, Dr. Joe, thank you.
All right. Then a very interesting question from Nick. He always comes up with interesting questions. And it's about whether or not it's possible to calculate the number of people who have ever lived. Well, I don't know how one does that, but apparently it is possible because there certainly are statistics about that. Statisticians somehow and demographers have been able to do that. And the answer is about 107 billion. So about 107 billion people have ever lived. So there are about 15 dead people for every person that is now alive, which also means that heaven is quite crowded, although probably not quite as crowded as hell. So anyway, there are about 107 billion people who have ever lived. Okay, someone is asking, what is the name of the margin that I spoke about? Well, the margin that was used in the study that Dr. Renaud carried out was a margin that was specifically made for that study. It's not commercially available, but it was made with canola oil. So if you want to look for a margarine that replicates that, it would be one that is made with canola oil, but you also want to look on the label to make sure that the word hydrogenated does not appear, because if it's hydrogenated, then it's possible that there are trans fats in there. Okay, and the question is, and one last question is, about tonight for someone contemplating the frying of latkes in olive oil. Is there anything dangerous because it changes the chemistry of the olive oil? No, it does not. That really is one of these myths that go around. Frying in olive oil is perfectly fine. You, of course, don't want to reach the smoke point when it starts smoking. But if you're keeping the temperature down, it's very good oil to fry in. And that is it for today. We have run out of time. We will be back with you same time, same station next week. Until then, I'm Joe Schwartz, hoping all the chemistry in your life comes out just right.
Good afternoon. It's 4 o'clock. I'm Nicole Peruano with your CTV News Update. It's currently minus 3 degrees, feeling more like minus 7. Weather details in minutes. Here is what is making news right now. Well, the Montreal Canadiens are looking for a new general manager.
Marc Bergevin has been dismissed by the Montreal Canadiens. Team owner, president, and CEO Jeff Molson has announced that a process to recruit the team's next GM is underway. Also let go were assistant GM Trevor Timmins and senior VP of Public Affairs and Communications Paul Wilson. Former Rangers GM Jeff Gorton will serve as executive VP of Hockey Operations. He'll run the day-to-day operations while the search for a new GM continues. The Canadiens' press release indicates the next general manager will have to be bilingual. Marc Bergevin became the Canadiens GM back on May 2nd, 2012. I'm Dan Robertson.
The chief of Quebec City Police publicly addressed the video circulating online showing a member of his force hitting a black teen and shoving snow in his face while pinned to the ground. Denis Turcotte said none of his officers are going to be suspended immediately, but internal investigations may lead to suspensions. 20,000 more children aged 5 to 11 across the province rolled up their sleeves to get their first dose of a COVID-19 vaccine. 85% of eligible Quebecers have now gotten at least one shot. The percentage of fully vaccinated Quebecers is still at 81%. Cases of the Omicron variant of the coronavirus popped up in countries on opposite sides of the world today, and many governments rushed to close their borders. That came even as scientists caution that it's not clear if the new variant is more alarming than other versions of the virus. UK Health Secretary CJAD says vaccination is the best response for the time being.
We know that vaccines work. Yes, this new variant, they may make it less effective or not, but the vaccines work. They are our first form of defense.
The variant was identified days ago by researchers in South Africa, and much is still not known about it. And the Quebec Liberal Party have chosen their candidate for the Marie-Victorin riding. Emily Nollet is running for that seat. The 35-year-old is a university researcher and a newcomer to politics. So far, we know she'll be running against the Parti Québécois' Pierre Nantel. Neither the CAQ nor Québec Solidaire have put forward candidates yet. You can follow us on Instagram and Twitter at CJAD 800. And with the latest from the CJAD 800 Traffic Center, here's Mark Shaloub.
Good afternoon, Nicole. Metropolitan westbound at Stinson, disabled tanker truck on the right-hand side, so you're backing to L'Acadie. You may want to grab the Saint-Laurent-L'Acadie exit and re-enter at Stinson. Laurentian South as a result. Bit of a pinch there from Henri Bourassa down to the Met, which is slowest from the Laurentian Outer merge to Saint-Laurent. To carry northbound, just a little patchy over the top third, as is the southbound side between the Jean Talon exit and entrance. Tuned from the South Shore, you're in good shape on the bridges. 10 westbound, you feel a slowdown start at Highway 35. It's quite heavy all the way until you just get past the Lacadie River. Star 800 to enlighten us as to what the story is there. Imagine Black Friday ran all weekend and had the lowest prices of the year. Canadian Tire's Black Friday sale continues until Sunday. Visit canadiantire.ca or flyer for details. Traffic and transit every 15 minutes on CJAD 800, next at 4:15.
Your Dormivue Weather Center forecast. Mainly cloudy tonight with a low of -7, a wind chill of -14 overnight. Tomorrow, a mix of sun and cloud with a high of -2, the wind chill making it feel like -7. And Tuesday, periods of snow with a high of -1. It's -3 downtown, feeling more like -7. For all the news during the day, stream us on your smart speaker. Just say, play CJAD 800. Your next CTV News update is at 4:30.
The opinions expressed in the following program are provided for general information purposes only and should not be construed as advice from CJAD 800 or Bell Media. Listeners should always consult their own financial advisor with questions or concerns. The following is sponsored content.
This edition of Smart Money is brought to you by Louis Rosen of Raymond James.
Now, News Talk Radio CJAD 800 presents Smart Money with Louis Rosen.
Good afternoon and welcome to Smart Money with your host today, Farron Campbell, wealth advisor with Raymond James. Louis won't be on the show today, but we'll keep it fun-packed and filled with information, talking about taxes, investments, all type of stuff. And we've got Trevor Parry with us today, who's one of our team members, works with us hand-in-hand on lots of files when they get a little bit more complex as far as taxes and estate and all that stuff is concerned. How are you today, Trevor?
I'm doing well, Farron. And shall we begin with the most important news of the day?
Did you hear the announcement? They just let Bergevin go.
Yes, I was just verifying it on several sources, and I will confess that I'm quite pleased with that. Hopefully at his next job he'll have to get a decent haircut. So we'll see.
Interesting. But I mean, you know what's interesting about it is the fact that it's not just letting him go. It seems like they're restructuring, like they're overhauling their front office in a certain sense.
Yeah, I think so. And
that's
we'll see who comes in. I mean, there's always potential names for GM, and we'll see if the coach survives. But given the start of the year, it can only get better. So
yeah, I would think so. So we'll see what develops there. But great to have you on today. I say welcome this afternoon, but I look outside; it's quite dark. Looks more like evening as we
and there's
4
snow.
o'clock here
I don't
in
know
Montreal.
if you're getting it. We are here in Greater Hamilton, where the Tiger Cats are about to send your Alouettes into the I guess clean out the locker phase.
Yeah,
season.
It is what it is. Not so exciting for sports here in Montreal this year, unfortunately. But it can only go upwards from here.
Yeah.
Yeah, great. So, you know what? So often we meet people, we're always getting calls in from the radio show, and a lot of what we talk about and a lot of what we get asked about has to do with investments and rates of return and what stock to buy and ETFs over funds. But the truth is the work that we do together is far greater than that. And it's a lot more about what you keep. And I've noticed, and I'm sure you know this as well, that what we're able to do on the planning side and through some of this insurance and tax planning and all this stuff, has a far greater impact than, a couple of percentage points or lowering your fees by 0.5% or 1%. So I expect it's quite helpful.
Canada has pretty punitive and high tax rates. And so even if you knock the ball out of the park, you're going to give a good chunk of it away to the government, and it doesn't end there. I mean, it's cradle to grave taxation in this country.
Yeah, so we do notice through the political parties there's a difference in terms of their view on taxes. So I think the Liberal government being in, we can expect the budget next year and what's to come. I think you're sort of aware and in tune with some of the things being talked about. Maybe you can talk a little bit about some of the tax measures that are possibly being contemplated.
Sure.
What are the things that people, might be shocked at to learn?
Well, what they ran on, not a lot of detail. There was a lot of conjecture as to what could come down the pipeline. I mean, they're talking about the increase in the corporate tax on very large corporations and things like that, and which is silly because it's simply capital is absolutely fluid. They'll just simply move. And if you remember, years ago when Tim Hortons, I guess it was Burger King, did the deal where they flipped into Canada because
Yes.
Canadian rates at the time were less than the United States. The same thing can happen. I mean, if the American corporate rates stay the same, and given the quagmire in Congress, it's likely they do, and Canada brings in punitive rates on our largest companies, they'll walk. And I'm also seeing that, across the board with people. A lot of doctors, entrepreneurs are saying enough's enough, and they are going elsewhere, largely the United States. But this is a government that likes taxation, and they have dressed it up as sort of this great comeuppance against the so-called 1%, which in Canada is $244,000 a year. The United States, it's approaching 500,000. So, I mean,
almost
that's still
double.
a good income, but I hate to say it. Well, it's true. That's the middle class. That's where the top rates hit. And then in Quebec, you have your top rates hit at like $109,000, which, though you do not have the highest top marginal tax rate in the country, that's Nova Scotia, you have the highest rates hitting at the lowest comparative incomes. So it's a real tax burden there. What as I said, they've done is they've dressed it up as, reapportionment. We're only asking people to pay their fair share. Well, in my humble opinion, asking someone to pay more than 50% of what they earn is morally indefensible. It's not fairness at all. So what else can we see? The big one in the tax community, and yes, there is such a thing, right, where all the propeller heads get together regularly and try to speculate as to what's happening, is capital gains changes. So we know the NDP has demanded that, and if the NDP is keeping Mr. Trudeau in power for a while, they're likely to get it. And so the way that works is right now, if you sell a capital property, so your home is exempted, but if you had an investment property, you sell a stock, only half of the gain is counted for tax purposes, which gives rise to tax at about 26.7% is the effective capital gains tax. what they're talking about doing is changing what they call the inclusion rate so that 75% of the gain is taxed. It used to be that years and years and years ago. And Mr. Kutchin and Martin reduced that over the years down to 50. So what would happen is that your capital gains rate would now go to 40. Well, that would be terrifying, not just for the living, but also for the dead. And we can get into that later on. But that tax change would have massive revenue effects, both for the government in taking it and for those who are paying it. We also hear about something called a wealth tax. And a wealth tax, the Parliamentary Budget Office had a paper out, and they speculate that if persons or, I guess it's individuals with net worth of $1 million or $10 million and north are taxed for a one-time payment of 3%, and $20 million and north would be taxed at 5%, and this is a one-time payment, the government would raise somewhere near $44 billion over the next 5 years.
This is a one-time payment at death, you're saying? Or
No, while you're alive.
Once you hit that threshold?
Yes. So how do you account for it? Or do they count? I mean, potentially they're going to count unrealized gains, which good luck doing that. And then it's a complete quagmire because, I've done quite a lot of work in the agricultural field, and I'm a longtime member of a group called the Canadian Association of Farm Advisors, and farmers are famous for being asset-heavy and income poor. Yes. And so what are you going to do if you have a large farm? Let's say you have a dairy operation that's worth $15 million. How are you going to raise the money? What if you're a wheat farmer out in Saskatchewan? You're going to sell off parcels of land? And then, of course, if the farmers are protected, then fishermen are going to be protected. And then why not small business people? And it goes on and on and on. So it's one of these silly ideas that hopefully they never implement. But if nothing else, I can tell you, my phone rings regularly with people who are, terrified and fed up at the same time because they say, when is enough enough? So there's that out there. The one that is potentially a political third rail, depending on how they would package it, was blurted out by a candidate in the last federal election in New Brunswick, and he confirmed something we've known for years, that the Liberals have been looking at eliminating, curtailing, or modifying the principal residence deduction, which is a motherhood issue for Canadians. So, yes. Folks aspire to own a home. We've seen the real estate prices in Montreal go up dramatically. Where I am in Ancaster, with all the smart people getting the hell out of Toronto, our prices have gone through the roof. So, and people are banking on that, really financing their retirement. So
we see that far too often, that people end up with their principal residence as their biggest asset. It's not something we recommend, but
overwhelmingly.
We see that. Yeah.
And so what we know is that they've thought about doing away with it or whatever. I don't think they would do away with it. Remember, the Liberals are smart political operators, and so what they were more likely to do is they would say, well, only the 1% have homes worth more than $750,000, let's say. Right. So why don't we, continue the exemption for a certain amount, and everything above that we'll tax that either as a capital gain or as some modified tax. And sure, the government coffers would be full. None of them look at actually realistic ways to fix the problem. My own position, and it's widely shared on, I'll say, folks of sort of a conservative bent, is that you would be better off to cut income tax rates down below 50, so you get a lot of the tax evasion or avoision ending, because philosophically people are more prepared to pay that, but increase the HST to 20% for 36 months. It's a consumption tax. The government has pumped so much money into the economy, you would probably get the results you need. And of course, the big thing is cut spending. Walk into a store, walk into a restaurant, and see how few people are working. That's the specter of COVID. They have to end this kind of, silly cradle-to-grave spending. People don't want to come back to their jobs, not because they're afraid of COVID, because they don't want to come back to their jobs. They're getting government checks. And that might be, somewhat cavalier, but I think that's the truth. So there is taxes are coming. The dropping of rates isn't going to happen.
So lots of things probably going to change, but then we'll spend some time talking about how we can help you reduce those taxes or protect yourself from some of these changes that might be coming. But for now, we're going to go to the CJAD 800 Traffic Center.
Well, we have ourselves an issue on the 10 westbound that has just been resolved. We had it cooking at the Lackady River just before the bend prior to the way station, but you're still slow from the Highway 35 merge on the 10 westbound until midway to the Lackady River. Meantime, to Cary north and southbound, just a little brake tapping in portions of the top third. Met West, get off at the Saint Laurent Lackady exit because it's a crawl until you get past Stinson, where there's a stalled tanker truck on the right-hand side. Could be a while before they can tow that puppy away. Laurentian southbound busy, Côte Vertu down to the Met. Earn 40,000 Ford Pass rewards points and feel confident on the road this cold season with the Winter Performance Package. Contact your Ford service dealer today or visit Ford.ca. Let us know what you see on the roads. Calling your tips to Star 800. I'm Mark Shalhoub. Your next report at 4:30.
This edition of Smart Money is brought to you by Louis Rosen of Raymond James.
Help Wanted, a 4-part series with Sophia Meisenheimer on the labor shortage. Who's it affecting? Could it lead to more opportunities for you?
10 westbound, we had an earlier incident at the
Andrew Carter Morning Show on CJAD 800.
Theo saved big shopping Epic Cyber Monday deals on Amazon. So now he's free to become Thoughtful Theo. And Theo's got a gift for everyone. Even his personal trainer, Donnie.
Yo, bro. Branch-chained amino acid supplements. Oh, dude, my heart is feeling swole right now.
Get jacked for Amazon's Epic Cyber Monday deals.
Oh.
Spend less, smile more.
In the morning, when you leave for work and you hear,
"Have a great day, Mom."
It also means,
"Be careful at work, Mommy. Don't take any risks and always pay attention. I don't want anything to happen to you. I want to play with you tonight. I love you."
Your health and safety matters to so many people. At work, let's identify the risks and work together to eliminate them. A message from the CNESST.
Black Friday is on now at Lucky Per. From November 25th to December 1st, save up to 70% in-store and online, featuring brand new offers on hikers, fleece, jackets, and more. Visit Lucky Per in-store or at luckyper.com to shop and save.
Hey. Hi. Oh, hang on. I'm getting something.
Oh, right. Your psychic powers.
You're going to drive around town without a drop of gas.
Impressive. So nothing to do with you sitting in my new Escape plug-in hybrid.
I also see you driving me to yoga.
Uncanny.
It's a gift.
Drive the future now in the 2021 Ford Escape SE plug-in hybrid with an electric range of up to 60 kilometers. Lease for $187 bi-weekly for up to 48 months with no down payment and a retail value of $34,091, including government rebates. Visit Ford.ca for details.
Be honest, weren't you a little worried you'd never hear this again? Yes! Sell-Off Vacations is back with a big Black Friday Cyber Monday sale. Get exclusive savings and deals on Sun Vacations. Go on, get a deal for the vacation you deserve. Hurry, sale ends November 29th. Visit one of our 2 stores in Montreal.
selloffvacations.com. selloffvacations.com.
GCP Research is actively recruiting for its medical studies. If you have osteoarthritis of the knee or suffer from depression and have trouble sleeping, you may qualify for one of our studies. Please call GCP Research at 514-800-2130.
At jackpotcity.net, we know how to build you the best casino, so you can do amazing things with just one chip. Our table games are honed to perfection. We have over 500 online slot games, all designed for excitement, including the world-renowned progressive jackpot slot, Mega Moolah. Play for free at jackpotcity.net today on your tablet, laptop, or mobile. Jackpotcity.net, casino games perfectly made for you. Free play only website, 18 plus. Please play responsibly.
The perfect gift for a friend or loved one or for yourself is a gift certificate from Epiderma. November 15th to December 20th. Buy a gift certificate at epiderma.ca and get an extra $10 towards any purchase of $100 for the holidays. Epiderma.ca.
This edition of Smart Money is brought to you by Louis Rosen of Raymond James.
Now, News Talk Radio CJAD 800 presents Smart Money with Louis Rosen.
And good afternoon / evening. Welcome back to Smart Money with your host today, Farron Campbell, wealth advisor with Raymond James. And we've got Trevor Parry on the line with us today. We're talking tax for the most part. So Trevor, I mean, we talked about some of the things that have been being kicked around, I guess, contemplated as far as tax reform or, some tax changes coming up next year. So one of the things that you talked about, I think the one that's probably the most likely, if you will, or probably the easiest one for them to, maybe not the easiest one, but the one I've heard people talking about the most is the capital gains inclusion rate. What would you say, how would a capital gains tax increase affect the entrepreneur as well as the incorporated professional?
Most of the time, Farron, it would, well, first of all, they're going to be paying higher taxes on their invested savings. So one of the reasons that entrepreneurs and professionals incorporate is to defer tax. And though the current government has, made it deferral less attractive, it's still there. So what would happen is if you're now paying 40% tax on all your capital gains, it's going to reduce the amount, the nest egg that is in those corporations, and that's something that we would want to look at. There are, as you know, financial products that would not distribute things like that. They can offset a lot of the gains. Those things are still there. We do use permanent life insurance for that reason a lot because the policies will grow at reasonable rates of return. Certainly in the I'd consider them robust given that they're pretty low risk. But we can insulate the growth, the tax on the growth with that type of product. The real effect of a capital gains increase is on the taxation associated with dying. And most folks really aren't familiar with what happens. They hear the noise from the United States where there are estate taxes. We don't have those here. But what we have is something called a deemed disposition. And what happens is when a Canadian taxpayer dies, regardless of their citizenship, if they're American or dual, they have U.S. issues, and that you and I have dealt with before, and it's a whole other, Gordian knot. But they're deemed to have sold everything the moment before death. Now, if there's a spouse that survives them, there's a rollover, so you can delay the tax bill until that surviving spouse passes. That would immediately mean for our business owners and for our incorporated professionals that when that deemed disposition is created, they are going to have a tax of 40%. On the value of their business, on the value of their practice. And that's pretty large. That's a considerable increase from, 26.7. So that's something that they would have to consider, they would have to plan for. There are strategies that are available to reduce that, both in terms of legal structuring and in terms of financial products. But that's the first, the real peril. The other issue has to do with very technical planning that we do to avoid something called double taxation. So, again, the benefit of the corporation is that you pay lower rates and you can defer tax, but if you don't do your planning correctly, you can end up paying 73%, which again would increase dramatically if the capital gains rates go up, because a corporation, though it is not a living person, is a legal person. And in order to pass the value of that legal entity onto your beneficiaries, usually your kids, you got to get rid of it. You have to wind up the company or have the shares bought back from the estate by the corp and canceled. Well, that's a dividend. And if you don't do this within a set period of time, which is 1 year after the death of the taxpayer, you get to pay both. And that, with a capital gains increase, would push things up to about over 80%. So would you like to see your life's work more or less completely taken by the government?
And these things are easily avoidable, I mean, in a certain sense, because we meet people all the time. Obviously, business owners, professionals are extremely busy. They do what they do. They're good at what they're good at. And a lot of times we see there's a lack of a plan. They have an accountant that's a scorekeeper that tells them how much tax they have to pay at the end of the year. They file, obviously, but a lot of the times these tax lawyers that are well versed in this stuff obviously charge considerable amount of money to per hour to plan for them, whereas we have this unique view and this unique situation where we're able to do the planning for them and really not charge them. We don't, because we're managing their investments, our fees come from the investments or through some of the products that they may get from us. And all the planning that you do and all the memos that you provide and all the, advice that you provide is really, included in whatever fees that they're getting for their investment management. So.
Yeah, I think both of you and I have learned to speak accountant over the last few years. Yeah. We also work in a very integrated fashion that we're involving the client's accountant, the client's lawyer. If we need to bring, more firepower to the table because it's a complex corporate situation, we do that. But not to speak ill of accountants because I spend most of my day talking to them. It's amazing how many of them don't really understand taxation. They know how much they have to pay and where the deductions are and how to deal with an audit in most cases. But strategy and tax planning is something that many of them have not studied, and they're either scratching their head or having to send that out.
Yeah, because quite often we're telling them, and when you speak to them, they're on board and they say, yeah, this makes a lot of sense. And it's just, they don't have the time in a lot of times to sort of sit there and think about somebody's situation and craft a plan for them.
Exactly. But now it's a call to action because with potential increases in rates, you're going to lose between 40 to 80% of your net worth if you don't act. Yeah. So you have to make sure your accountant's up to snuff. And it falls upon the taxpayer to go out and take action, to plan, to make sure that the vast majority of their life's work go to the people they care about.
Nice thing is that we, as much as we hear these, tax ideas being floated around and contemplated, do you ever hear anything about insurance, tax laws on insurance changing, or does that seem like something that's...
They overhauled insurance, the substantive law dealing with life insurance in 2016. I don't, you will see CRA going after aggressive planning, but its general consensus is that the work has been done. That we have an understandable and predictable playing field. Canada has, without a doubt, the most positive laws and regulations governing insurance in the G7. That's why we use it so often. It is really the last great tax shelter available, and it's got a negative connotation to it because it's people think you have to die to be able to use it, which isn't the case. It is very much a living strategy as well, but. The substantive law governing insurance was changed, more or less really updated for different products and interest rates and mortality changes. So I don't see any substantive changes coming down the pipeline.
That's great because the next segment we'll be talking about how to use insurance to complement your retirement and plan for the future, and not just the insurance that makes our beneficiaries wealthy upon our passing. We're going to talk about how to use it while you're alive, as Trevor says, and lots more to talk about coming up after this.
Anytime news breaks, CJAD 800 has it.
11,000 unionized public daycare workers with the CSN have voted overwhelmingly in favor of an unlimited strike mandate.
On the air, on Twitter, email to your inbox. Up to the minute. News Talk Radio. CJAD 800.
At Sports Experts and Atmosphere, it's the Black Friday sale. From Friday until Monday, November 29th. Get 20% off our apparel and footwear collections. And get 15% off regular priced equipment. Selected brands and models, details in store.
Good afternoon. It's 4:30. I'm Nicole Perano with a CTV News update. Here's what's making news right now. The Montreal Canadiens have fired General Manager Marc Bergevin effective immediately amid a rough start to the season. The team says the process to recruit the team's next GM is underway. Assistant GM Trevor Timmins and Senior Vice President Paul Wilson are also getting the boot. The World Health Organization is calling on countries to keep their borders open. Several nations have imposed travel restrictions on South African countries, including Canada, in recent days over fears of the new Omicron COVID-19 variant. The international organization says countries should instead adopt a scientific approach based on the assessment of risks. And heavy rain from BC's latest atmospheric river caused flooding on several highways this morning and triggered another landslide. While there have been no major slides or washouts reported during this weekend's storm, highways were preemptively closed yesterday. With the latest from the CJAD 800 Traffic Center, here's Mark Shaloub.
Good news and bad news out there, Nicole. The 10 westbound incident at the Lackady River is long gone, and it's just a question of a bit of residual volume as you merge onto the 10 west from Highway 35, loosening gradually, and then some brake tapping all of a sudden at the Highway 30 merge until Chevrier. To carry north and southbound, nothing major today. Met westbound still taking quite a while, as would normally be the case, to tow away that stalled tanker truck at Stinson on the right-hand side. You're backing towards Rockland. Maybe get off at the Lackady Saint exit and re-enter at Stinson to save some time. Laurentian South busy as a result. Henri Bourassa down to the Met. Save big on KFC's festive double bucket and satisfy your Black Friday cravings. Order in-store and online. Ends November 28th. Traffic and transit every 15 minutes on CJAD 800 next at 445.
Your Dermavoo Weather Center forecast. Mainly cloudy tonight with a low of -7, the wind chill of -14 overnight. Tomorrow, a mix of sun and cloud with a high of -2, a wind chill making it feel like -7. And Tuesday, periods of snow with a high of -1. Your next CTV News update is at 5 o'clock.
This edition of Smart Money is brought to you by Louis Rosen of Raymond James. Renofco Renovations is celebrating 20 years in business. That's 7 consecutive Consumer Choice Awards, 3 consecutive years as one of Canada's fastest growing companies, 2 years of West Island Chamber of Commerce Excellence in Business Awards, and more. And it's all thanks to you. Renofco's been doing it all for 20 years. Home renovations, fire and flood restoration, decontamination, and beyond. And thanks to your trust in their expertise, they are Montreal's leader in home renovation and restoration. Renofco.com.
Try new Tim's espresso beverages for only $2 from November 15th to 28th. Made with 100% ethically sourced premium Arabica beans, customized and handcrafted just for you. At participating Tim's restaurants in Canada. Extra charges for modifications, terms apply.
Need a rapid COVID test? Test with the best at InstaTest Express, the fastest and easiest drive-through COVID tests, administered by registered nurses, Health Canada, and travel approved. No appointment necessary. Just visit an InstaTest Express location near you in Montreal, Laval, DDO, and Brossard. Results in 20 minutes for antigen and within 24 hours for PCR. Go to instatestexpress.com and use promo code RADIO to save $15 when you book online. instatestexpress.com. Mobile and group testing also available.
When the time comes to buy or lease a Nissan, never compromise on quality. Buy your Nissan from Spinelli Nissan.
Rediscover attraction. It's this month's sale event at Spinelli Nissan. Lease a 2021 Kicks SCVT from $236 a month for 24 months at 2.5% APR with $1,495 down. It's like paying $55 per week for an amazing SUV starting at $22,043.
Get your Nissan at Spinelli Nissan, the address of choice for all automotive services.
At Sports Experts and Atmosphere, it's the Black Friday sale. From Friday until Monday, November 29th. Get 20% off our apparel and footwear collections and get 15% off regular priced equipment. Selected brands and models, details in store.
Reclaim your Saturdays. Call 1-800-GOT-JUNK and 2 smiling, happy people will magically appear at your front door.
They'll be driving a clean, shiny truck.
And they'll be wearing snappy, happy uniforms.
All you have to do is point, 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 point.
And that junk will be gone.
Hooray! You have a Saturday.
Give us a call.
And we'll give you back your Saturdays.
Call 1-800-GOT-JUNK.
Or visit 1-800-GOT-JUNK.com.
4 hip-hop legends from the 90s are getting the band back together. Literally. Eve and Brandy head up the cast of Queens.
I'm a mom. I don't rap anymore.
Queens, new series starts Tuesday at 10. Get into it only on CTV. Then stream anytime.
This edition of Smart Money is brought to you by Louis Rosen of Raymond James.
Now, News Talk Radio CJAD 800 presents Smart Money with Louis Rosen.
Good evening and welcome back to Smart Money with your host today, Farron Campbell, wealth advisor with Raymond James, and we're here with Trevor Parry. We've been talking tax, talking about planning, really. It's very important. And as I said at the beginning of the show, far too often we meet people that are focused on top line strategies with regards to, their investments, their business, their practice, whatever it may be. And they've done a good job building and working very hard. But at the same time, if we're not careful, we can lose too much of that unnecessarily. I'm all for paying my fair share of taxes, as I know you are too, Trevor. But, we don't want to pay more than we have to or more than our fair share. And I think we know that the people at the top 1% that they always claim to be trying to affect does a very good job planning. And a lot of what we do is taking the strategies of the wealthy and then trying to bring those strategies to the middle class.
And I don't want Justin Trudeau and his band of trust fundians determining what fair is. So I think we're on the same page that way.
Yeah. So, and you know what? A lot of this stuff is, we've said this time and time again, and you think, that everybody's doing it or everybody's done it, but the truth is everybody hasn't, and everybody hasn't sat down with the right person because, a lot of people aren't licensed to do what you do, or a lot of people aren't insurance licensed like myself and Lewis. So, they simply, all they do talk about is investments and investment strategies. And that's where I think we differ substantially, because I think we do very well on the investment side with our portfolio manager, Christine. And we've got a great strategy that's, dividend paying pension style management approach. But at the same time, like I said, the planning that we do is really phenomenal. When we're able to look at what, would happen should they not do what we're recommending, and what their estate would pay, or the taxes that they would pay when they reach for those, monies inside of their corporations or holding companies, whatever it is. And then once you're able to demonstrate, some of the plans and strategies, we look at the difference, it's huge, because when you don't have the government sort of, taking half of your returns, or, what's growing inside of that nest egg, the compounding effect is incredible. So maybe we can get into it and talk about some of this, and, talk about some of these strategies, and talk about, how a business owner can actually, save and build inside of their portfolios, with regards to that. So, obviously it's important, that we figure out how to save while reducing taxes. But by the time business owners realize that it is critical for tax reduction, the truth is the sticker price is quite large. So maybe you can talk about how we use this, for business owners, to use the use of insurance to build wealth, and then we can talk about the implementation.
Sure. Well, Farron, and businesses are like their owners. They have life cycles. And throughout the life cycle of a business, there are various tax challenges. So, I don't get involved in the startups. When I see the businesses, they're mature, or they are in a, pretty good profitable situation. Sometimes we're coming in to fix things, but most of the time the tax planning is okay. It's the physician is 55 years old. The entrepreneurs are that age or older, sometimes younger. I see a lot of tech guys these days, and if you sit down and you say, okay, here's what happens at death if you don't do the right things, they're scared, but it's still decades away. So it's not front and center. So when I start talking about tax planning, I want to talk about the right now. And the right now is dealing with tax on your corporate savings. It's talking about losing the ability to claim the small business deduction if you earn more than $150,000 of passive income in your corp. And that leads to sometimes a discussion of insurance, sometimes other discussions. So for years, I used to run across the country as the national sales director for a boutique actuarial firm. And actuarial science is a wonderful thing. It's the only profession, I think, where Asperger's is required. And we used to build pension plans. And in the province of Quebec, I used to build lots of them. They're called individual pension plans. Quebec has extremely positive provincial regulations governing these things. So those can work pretty well. Now, they don't work in every situation because sometimes you're better off doing, from a tax perspective, doing different things. Like sometimes RRSPs are better. But for a lot of, for instance, physicians, I really like individual pension plans for physicians because they're not going to sell their business. They need to learn how to save because sometimes they're not good at it. So that's one structure that we look at a lot of the time. But more and more these days, I end up looking or discussing the use of permanent life insurance with entrepreneurs and professionals as a living strategy. And I'm somewhat older than you, so I remember in 1981 when London Life came out with the most successful marketing campaign in Canadian life insurance history, and it was called Freedom 55. And Freedom 55, we had 18% interest rates then, was the concept that if you took 10% of your salary and bought a whole life policy, and you did it for 20 years, you could take the thing down to the bank and they would give you a line of credit against it because it had all this cash value in it. And cash value in a permanent whole life policy, once paid, is guaranteed. And the banks love that kind of stuff. They love it in many cases more than real estate. So that is still a viable strategy, only now we've adopted it for a corporation. It's called a corporate insured retirement plan. And so what happens is you take a portion of the retained earnings of the company, and there's a number. You've got to be able to figure it out, and you can't impoverish the cash flow of the business and all that kind of stuff. So there's some calculations that go into this. And we build a policy that's funded in a period of time, usually 10 years, sometimes 20. And when the individual reaches, and it's not always 65, a lot of the time I build these things to start at age 70, 71. What we end up doing is the same thing. We have the corporation owning the policy, and either the corporation borrows against the policy or the individual shareholder enters into an agreement with their corporation to use that asset. And that's got to be papered correctly, but basically the loan comes to them, and loan proceeds are not taxable. So here's a way that, in most of the cases, when you and I have put these together, the individual is going to look at a stream of income starting at, let's say, age 70, of $100, $150, $200,000 a year till death, and it's tax-free. And then now tax gets paid at death, and the loan gets paid off at death, and all that kind of stuff. But I think it's a strategy that has real legs. So the Freedom 55 plan, certainly been modified. 55 is when we don't tend to see it kicking in, but we'll call it Freedom 70 or Tax Freedom 70 maybe. It's still relevant. So it's a living strategy. When we get into the Grim Reaper discussion, life insurance is critical because death benefits, and again, when we're talking about business planning, I always tell folks, look, death benefit, the number's wonderful and all that, and yes, it can take care of the kids and all that, but it has to flow through this structure called a corporation. So the most important number is something called a capital dividend credit. And a capital dividend credit is, you'll know it when, for instance, if you sell a building, again, I told you half the thing is taxable and half's not because on the sale of a capital property. Well, when life insurance pays to a corporate owner, a portion, sometimes all, but usually the overwhelming majority of the death benefit is a credit to this notional account called a capital dividend credit. And capital dividends can be paid out tax-free. Now, I don't want to get into the intense brass tacks of what we call post-mortem planning and stop-loss rules and all this kind of stuff. But when we have a situation, we sit down with business owners or professionals and we talk about, if there's an age difference between the spouses, do you want everything tied up with a nice bow? What's going to happen? Are the kids going to carry this on? Are we looking at reorganizing the company into a freeze? So all the living planning that's going on. Then we have to integrate this capital dividend strategy that really can only be created with permanent life insurance. I mean, term does do it too, but term gets inordinately expensive, and often the worst case scenario is that you're still alive on the day the term expires, and then all the planning you've done is for nothing.
Yeah, so it becomes far too expensive at that point to continue on the term. Yeah,
but people are daunted by the cost of permanent life insurance, which we can talk probably in the next segment of how do we deal with that. Is there a way of reducing the impact on cash flow so that we can go and get the coverage that's required, do the advanced planning, and take a hammer to the tax bill, but do it in such a fashion that it's affordable? It's a sleep-at-night number.
Makes a lot of sense. So we're going to throw it over to Mark Shaloub at the CJAD 800 Traffic Center and be back shortly.
Well, Farrell, we have a decent drive. We got rid of that incident to 10 westbound at Highway 35, but that volume, accordion-like, has moved over to the 30 merge through until the Pelletier sector. Met westbound, they're still dealing with that tanker truck at Stinson, trying to get it set to tow it out of harm's way. Still busy with the right lane and shoulder cordoned off, and you're feeling it from the Laurentian autoroute merge. You may want to grab the service road at that point. Laurentian South busy from Côte-Vertu down to the Met as a result. Eastbound side, a little brake tapping from Lacadie through until Saint-Laurent. P9 Bridge slow all the way across, and 40 westbound getting into the act at Highway 25. Perhaps an incident over there. Star 800 if you'd be so kind. Save big on KFC's festive double bucket and satisfy your Black Friday cravings. Order in store and online. Ends November 28th. Your next CJAD 800 traffic and transit report at 5 o'clock.
This edition of Smart Money is brought to you by Louis Rosen of Raymond James.
Help us deck the aisles. Winners, HomeSense, and Marshalls are now hiring associates at stores and distribution centers. Visit jobs.tjx.com to apply today.
Got PC Optimum points? Visit PharmaPre for the biggest bonus redemption event of the year. Now until Wednesday, December 1st, get up to an extra $30, $70, or $150 off when you redeem 70, 130, or 250,000 points. So get a jump on your holiday list with gifts, treats, beauty, and more. And get more for your points. A PharmaPre exclusive. Details in store.
Until Sunday only, take advantage of irresistible Black Friday discounts on frames at Gratian Scaff. Save 40 to 80% on frames with the purchase of a complete pair of glasses. Yes, up to 80% off, even on designer brands. Book your exam or bring your prescription to Gratian Scaff.
We're all gathered here today to honor Matt's time with us here on Earth.
Okay, this stops right here. Pack up the urn, forget about the flowers. Put away the mourning attire, 'cause there won't be a death. Thanks to Frank, who saved Matt from an opioid overdose by administering him a safe antidote, naloxone. We can all act to save lives.
Naloxone is available for free at pharmacies and in some community organizations. Find out more at quebec.ca/opioids. A message from the Gouvernement du Québec.
Yes, you can. With Sunwing, you can dive right into travel again. Heck, why not cannonball in? You can change your travel dates anytime with no fees and start relaxing long before the vacation begins. We make it easy to book with confidence, so you can finally turn that staycation into your dream awaycation. The Black Friday sale you've been waiting for is on now. Book by November 28th with your travel agent or at
Hey, Nissan. Have you stopped thinking big?
No. Are you talking about the 24-month lease instead of the 39-month lease for the redesigned Kicks?
Ah, okay.
With its zero-gravity seats and available Bose speakers, it's clear we're thinking bigger than ever.
And offering a small 2-year lease is a big idea.
Rediscover attraction with the 2021 Kicks leasing from the equivalent of $55 a week for just 24 months.
November 2nd to 30th, $236 per month, $1,495 down payment, retail value of $22,043 on approved credit, limited quantities, details at Nissan.
How Bell makes Black Friday better.
This Black Friday, check everything off your I gotta have it list. Like amazing phones at amazing prices. Check. Like plans loaded with data and no overage charges? Check. And Canada's best national 5G network to get the most out of your devices. Check. That's a check, check, and check.
Black Friday is now on. Get it all with Bell today. Visit a Bell store or bell.ca/Black Friday for details. Bell. Black Friday just got better.
Hey everyone, you know that warm feeling you get when you climb into a brand new Hyundai? Well, get ready to feel it during the Hyundai Feel the Heat sales event. Now lease or finance from 0% on select models and don't pay for 90 days on all models. Plus, they're all equipped to help you get the most out of fall, whether you're heading to the mountains to check out the colors or downtown for a pumpkin spice latte. But hurry, the Hyundai Feel the Heat sales event ends November 30th. Conditions apply. Visit HyundaiCanada.com or your dealer for details.
Escape the fall chill and shop at Cartier Cavendish. Find everything you need for the whole family. Enjoy a meal in the food court. There's always plenty of free parking at Cartier Cavendish, where it's always been, in the heart of Côte Saint-Luc. CartierCavendish.com.
This edition of Smart Money is brought to you by Louis Rosen of Raymond James.
Now, News Talk Radio CJAD 800 presents Smart Money with Louis Rosen.
Good evening and welcome back to Smart Money with your host today, Farron Campbell, wealth advisor with Raymond James. And we've got Trevor Parry on the line with us, and we've been talking tax and insurance and a little Habs too at the beginning. But we talked a little bit about, planning, retirement, the Freedom 55 plan, and, the ability for medical professionals to incorporate. The reason they do that is so that they can defer some of the taxes that they pay and use their corporations to save. What happens more often than not, like you said, usually when we meet these medical professionals, or whether they be business owners, they're usually at a mature point in their company. They've sort of hit this point where they're able to reflect and say, hey, wait a minute, I've got quite a bit built up inside my corp or my holding company. Now we got to figure out how to get this out or how to access it. And if you just pull it out as far as income is concerned, or even dividending, I mean, you're still going to be at a very high tax rate. So, all that incorporation did was really just, kick the can down the road. But, some of the things that you do are quite powerful. Maybe you can talk a little bit about how, this can be paid for, and, cash flow won't be hindered too greatly, and they'll still minimize taxes, still save for the retirement, and still benefit the estate.
Absolutely. I should also say from the outset that it's not just it's not just buying a policy. There's a lot of work and calculations that go into quantum, as in how much coverage and policy attributes and all that kind of stuff, and importantly, where you put the coverage. I get involved in a lot of damage control, where advisors, though they mean well, have counseled their clients to put policies into the wrong corporations, and along comes a potential sale, and it's disaster time. I see that a lot in the dental world, so I come in as a surgeon myself to fix problems. But paying for it is always an issue. Nobody but insurance people want to buy insurance, so the sticker shock can be pretty overwhelming. It's often, 6 and occasion 7 figures a year to acquire the coverage to make sure that the planning will be executed. And again, they have to understand what's the game plan. Why are they doing it? They're doing it to make sure that we can, in certain cases, get the corporate tax liability to zero. It is possible to do it. More of the time, I see it in the low teens, even below capital gains rates, and that involves structuring and all kinds of things like that. And I put my lawyer hat on to do that kind of stuff. But paying for it is something that the banks have stepped into, and it's really sort of, again, that modification of the corporate insured retirement plan. It's just that the borrowing occurs at the beginning. It's referred to colloquially as an immediate financing arrangement, and we've done a few of these. I've done scores of them across the country, and again, as long as the client understands the transaction thoroughly and has a tolerance to use debt in a prudent fashion, it works. The Americans write about this. They call it the infinite banking concept, or there's a short book called What the Rockefellers Would Do. Now, American insurance and trust rules are different than Canada, but the concepts are very much the same. We can accomplish it here. But in essence, what happens is that you have 3 key metrics. What are you borrowing at, which right now is sort of prime-ish, 2.4, sometimes less, sometimes a little more, depending on the size of the loan. What's the return of the policy? And the policies we're using are getting, between 5.25% to 6% a year of dividend, policy dividend. So we've got an asset that's growing well in advance of what you're borrowing, and then what are you using the proceeds for? So the loan proceeds, as long as you use them to generate income, so invest business operations, you can write off your interest charges, and you also get to write off a growing percentage of the actual insurance cost. So when we have all 3 of these numbers line up, and it's a great situation for it now, the client is able to go out and acquire the coverage for what is, in essence, pennies on the dollar. Now, it's not for everyone. And there is some aggressive planning in this, and we're always careful to make sure that the client understands that they have a due diligence role too, and that that their gut sense has to say, yeah, do this. But you're finding overwhelmingly, and the banks are very much in favor of this. They've stepped up large into this area because it is good planning, and it's good business for them, and it's good business for the client. Because instead of spending $100,000 a year in premium, they are borrowing at, let's say, 2.5%. So their interest cost is $2,500, and properly structured in the right corporation, that's deductible at 51%. So your annual cumulative cost is $1,250 to go out and basically acquire this coverage. Now, I'm summarizing what is a 2 to 3 hour conversation and a 15-page memo, as you know.
Yeah, of course.
But it does work. You just, again, as a lawyer, I'll tell people, listen, you have to have a good appreciation of debt. You have to see where the warts are on this strategy, because there are some. You have to understand what your costs are to get out of it. What happens? You have to do sensitivity analysis to determine what happens if there's a change in the interest rate. And then there's modifications of that strategy to accomplish different tax things they work quite well. So we often integrate that into the overall plan. And then the last piece, which I think one day we'll have a separate topic on, is what we call strategic philanthropy, which is charitable giving, but done not just through altruism to actually, really reduce tax, because we can't replace Justin and his friends as your primary creditor with your kids, but we can do it with a charity. So when we get into an integrated discussion of tax planning, we talk about living planning, the planning associated with the tax at dying, and we want to talk about legacy planning too, because it's not just the right thing to do from a tax perspective, it's really the right thing to do.
Yeah, no, you're absolutely right. And when we can show people how to reduce their taxes and give back, help their community, whatever it may be, church, synagogue, hospital, or any foundation or charity that they want to do, I mean, that's amazing, really, especially talking
Canadians
about
are a charitable people, and given the fact that the yoke of taxation is wearing upon them, unfortunately, some have gotten less charitable because they're looking at the cash flow. But again, we can, if we do testamentary giving, gifting policies, that kind of stuff, we can really, really hammer the tax bill. Sometimes right down to zero.
Yeah, so the bottom line is you got to know your options, and this is what we do. I mean, we meet people, we talk to them, we look at their situation, and a lot of times, obviously, the strategies we talk about are not for everybody across the board, as you said. We've really got to sit down and look at your individual situation, and it usually stems from, well, what if we do nothing? Right? And usually if we do nothing, it really looks, bleak, if you will.
If you do nothing, something will be done to you, I assure you.
Exactly. So, I mean, look, hopefully today we've been able to share information that helps people out there open their eyes to take a look at their own situation, and maybe give us a call or, send us an email to get some information. Be happy to share it with you. And you've been listening to Smart Money today with Farron Campbell, wealth advisor with Raymond James, and Trevor Parry. Looking forward to speaking to you guys next time. Have a great evening.
The opinions expressed in the preceding program were provided for general information purposes only and should not be construed as advice from CJAD 800 or Bell Media. Listeners should always consult their own financial advisor with questions or concerns. The preceding was sponsored content.
This week on the TED Radio Hour.
What does it mean to make amends? And could preserving more African American historic sites help America heal?
Building by building, story by story, we are beginning to understand who we are as a nation.
That's next time on the TED Radio Hour from NPR.
Listen tonight at 8. News Talk Radio, CJAD 800.
The most daring, the most creative, the most outrageous. TV's most buzzed about show is back. The Masked Singer, all new. Wednesday at 8, only on CTV. Then stream anytime.
Earnings are higher than ever for drivers with Uber in Montreal as riders go back to their normal life. For a limited time only, get up to $1,000 extra when you sign up to drive with Uber. Visit uber.com/drive to get started. Terms and conditions apply.
afternoon. It's 5 o'clock. I'm Nicole Peruano with your CTV News Update. It's currently -3 degrees, feels more like -6. Weather details in minutes. Here's what's making news right now. Start with breaking news. 2 cases of the new Omicron COVID-19 variant have been detected in Ottawa, making them the first to be discovered in Canada. Ontario Public Health confirmed the news this afternoon. The cases were found in travelers who returned to the country on November 23rd, but Public Health did not confirm which country they were coming back from. The number of new COVID-19 cases in the province are back below 1,000 after 2 consecutive daily cases surpassed it. 187 more people tested positive, and hospitalizations are up, now standing at 216, with the majority of the newly admitted patients being unvaccinated. On this day last year, before vaccinations, there were more than 670 people in hospital with the virus. Health Minister Christian Dubé shared a message from the World Health Organization reminding people about the importance of vaccination against the latest concerning variant, Omicron. And General Manager Marc Bergevin has been fired by the Montreal Canadiens. With more, here's TSN 690's Dan Robertson.
With the organization under intense public pressure following a terrible start to the season, Canadiens owner Jeff Molson has announced today that Bergevin has been dismissed. Bergevin was in the last year of his contract. It was rumored that he would not be returning to the club following the season's end, either by his choice or by that of ownership. Also let go longtime assistant GM Trevor Timmins and senior VP of Public Affairs and Communications Paul Wilson. Former Rangers general manager Jeff Gorton will serve as executive VP of Hockey Ops. He'll run the day-to-day operations while the team searches for a new GM who will have to be bilingual. Jeff Molson will meet with the media tomorrow at 11 o'clock. Marc Bergevin became the Canadiens GM way back on May the 2nd, 2012. I'm Dan Robertson.
And you can catch full coverage of tomorrow's press conference with owner Jeff Molson on TSN 690. The Quebec Liberal Party has wrapped up their 34th convention, emerging greener and more left-wing than ever. Between now and the October 2022 election, the main Liberal priorities are going to be fighting climate change and protecting the environment. They're also aiming to increase the greenhouse gas reduction target by 45% compared to 1990 levels by 2030. And Pope Francis is calling on civil groups and the military to do more to help migrants after the drowning of 27 people in the English Channel.
Quanti migranti sono esposti anche in questi giorni.
Pope Francis spoke out not just about those who drowned trying to make it to England, but about the danger and pain suffered by migrants at the border between Poland and Belarus and in the Mediterranean Sea. On Sunday, the Italian Coast Guard rescued about 250 migrants, including a newborn baby, near the southern region of Calabria. The Pope said many on the boats are escaping traffickers who capture and enslave them, sell the women, and torture the men. Megan Williams, ABC News, Rome.
You can follow us on Instagram and Twitter at CJAD 800. With the latest from the CJAD 800 Traffic Center, here's Mark Shaloub.
Metropolitan westbound is slow on the approach to the Anjou interchange, and just beyond it, it starts loosening after the Galerie d'Anjou and then busy again between the 215s. They've gotten rid of that stalled tanker truck at Stinson. DeCarry southbound is busy over the top third, northbound to a much lesser extent. Eastbound side of the Met, some resistance, Lacadie through until Saint-Laurent, as there is on the Laurentian South trying to get down to the Met. That leftover volume from the tanker truck incident on the Met West is backing you to Henri Bourassa as a result, and it's an accordion-like situation on the 10 westbound after an earlier incident at the Lacadie River, off and on from the way station to Pelletier. Step into Marché Adonis for deliciously fresh meats until December 1st. Take advantage of the beef tenderloin at $9.99 per pound. Their butchers cut it to your liking. Traffic and transit every 15 minutes on CJAD 800 and next at 5:15.
Time of the Weather Center forecast. Mainly cloudy tonight with a low of -7. The wind chill making it feel like -14 overnight. Tomorrow, a mix of sun and cloud with a high of -2. The wind chill -7. And Tuesday, periods of snow with a high of -1. It's -3 downtown, feeling more like -6. For all the news during the day, stream us on your smart speaker. Just say, play CJAD 800. Your next CTV News update is at 5:30.
This is Aaron Rand and Natasha Hall
on the iHeartRadio Talk Network.
Welcome to another edition of The Week That Was here on the iHeartRadio Network. I'm Aaron Rand along with Natasha Hall. There have been a lot of changes that A, you never saw coming, and B, probably might have not been prepared for, I think it's fair to say.
It's been a little rock and roll.
Sure. And for everybody, look, if you lost a job or were forced to, basically be let off your job or worked in healthcare, you know how tough that has been. But that's okay. That's looking in the rearview mirror. How do we look ahead, and how do you try to make 2022 a better year? Let's try to find out. Christopher Carter is life coach and author of Permission to Glow. He's on the line right now. Mr. Carter, thanks for being here.
Hey, it's great to be with you today. Thanks for having me.
Let's talk a little bit about looking in the rearview mirror. That's, I imagine, for a lot of people going to be a difficult thing to do given the kind of year that it's been. So how do you deal with that, first of all?
Yeah, so in coaching every day, we work on this concept called completion versus incompletion. So we tend to unconsciously carry around a lot of incompletion about how things went or didn't go for us, if we met goals, didn't meet our goals. And we can honestly say if we look around the world the last 2 years specifically, incompletion is everywhere. There's the pandemic, there's all sorts of different types of disruption, and a lot of us are inviting just change and disruption into our lives just by switching jobs and careers. We have the sense that there's something better out there for us, so we would bring this in, willingly. So what I always recommend people do is that we actively work on finding completion in all of this incompletion, and that could be as simple as just sometimes declaring things done when we need to move on to the next thing. But if we don't consciously, declare things complete, we will just kind of drown in all of that incompletion.
But can we declare them complete if they're not fully complete?
Right, exactly. Yeah. How do you do that?
Yeah, so I guess it's, I wish I could say that these last couple of years aren't the new normal, but if we look around our world over the last, maybe 10 years, I think we could see some of these patterns of volatility. There's a military term called VUCA, volatility, uncertainty, complexity, ambiguity. These forces are, no question, speeding up and gaining some intensity. So if it's not a pandemic, maybe it's climate change. If it's not climate change, it's the volatility in markets. And I agree. I did have a decent year investing in a little bit of Bitcoin currency, nowhere near as much as I should have maybe 2 years ago. But there's just as much positive potential out there as there is, negative threats and uncertainty. So to answer your question, where there is no completion to be found, we have to find that inside ourselves somewhere. And this is why I'm a big proponent of creating a stilling practice, a meditation practice, just to find some sense of calm in all of these storms. That is an inside job, and that's what most of the leaders I coach take on. So these leaders are typically at the front lines of a lot of change and disruption, and they have no choice but to do that inner work and kind of, find some sense of stillness, some sense of center.
I think a lot of us, I think there's almost two types of people. There's people who are completely excited and driven by the prospect of change, and then there's people who are freaked right out by it. So if you are one of those people who is scared of change, that the very thought of it gives you anxiety on any level, how do you begin to tackle that, and how do you effectuate real change in your life?
Yeah, and I think that the former, the people that are the kind of the thrill junkies, that they're also a little bit terrified of it. They can't help themselves, but change is scary for all of us because our brains are not necessarily wired well to process it. And one of the games we play a lot in coaching is just turning the inevitability of change into a game, to create games out of it that we might have a chance of winning, and it's all in the mental framing and how we frame up that opportunity that decides whether or not we're willing to play the game. And there's no doubt that change is hard, and a lot of times it needs to be. Growth in itself is hard. We're transforming, changing, we're letting go of something to make room for something new. That can be a painful process, but I also have a front row seat every day for it being a very exhilarating, rewarding ride.
So theoretically, I can understand that the issue of change, as you're just describing it now, can be very, very positive and exciting as well. But that's theoretically. I mean, for a lot of people, that change may actually not be coming. Do you have to convince yourself that change is going to be a positive change?
Well, I think it's important to take a step back from the change itself. So there's the content of life that just flows like a river. A job arriving, a job leaving, a lover or partner arriving in your life, a lover or partner leaving. These things happen. It is part of life, and I'm not saying it's all fair, and it's certainly less fair to some groups of people than others. I'm not debating that. However, we can shift our relationship to what that means. And by taking a step back, we could ask a simple question, which is, what is this change asking of me? And that in itself becomes just slightly more empowering than seeing it as face value, the face value of what is taken away. And trust me, I am in the same process right along the rest of humanity every single day of my life. You know, I have 3 kids and raising kids during a pandemic, homeschooling 5 personalities under one roof. Like, it's basically a testing ground every day to, well, what is it going to be today? Who needs to go to the hospital today for something? However, when we take that step back and just take a look at what is this asking of me, usually the answer falls somewhere in the realm of, it's asking us to grow. It's asking us to maybe show up a little bit differently, travel a little bit lighter, or hold the intensity of life a little bit more lightly.
Your book is Permission to Glow, Spiritual Guide to Epic Leadership. And it seems to me that I've heard with a lot of successful leaders that they tend to be very regimented. They have a routine. They either wake up really early, like just to be able to get everything done in a day. Now, I've found myself, I'm not particularly regimented, but even when I implement new things and I'm trying to stick to a routine, I'm not able to do it. It lasts for like a couple of weeks, maybe if I'm lucky a couple of months, and then I kind of fall off the wagon per se. So how do you get yourself to be regimented and stay on track?
Yeah, to grow in towards what I heard in the question is, how do we grow into consistency over time? You know, and I would put my money on bakers and radio people to get up earlier than the rest of us. By the way, like those to me are some of the most disciplined people with, you know, keeping sticking to the clock. We live in segments, right? However, for people that are just creating new practices, new habits, the foundation to me, in my experience, has been to infuse the process with a lot of self-compassion, to just know that we're not going to flip a switch and become a different person overnight. It just doesn't work that way. However, if we want to become a marathon runner, for example, we could try to run a few hundred yards the first day, build on it the second day, and gradually build up to that distance. It's the exact same thing with creating a meditation practice, stopping smoking, or becoming more consistent in your life. Consistency is built over time. And at the foundation of it, it's keeping our promises to ourselves, like keeping what is the minimum amount we could show up to stay in integrity with ourselves. And that in itself becomes motivating when we show up day after day.
Yeah, except I think as you describe that in a regular sort of workaday world or workaday year, because we can look at a bigger picture now, that would be easier to pull off or to convince yourself of than it is now when there's so many extenuating factors out there working, it would seem, against you that you have absolutely zero control over. So I imagine it's much more difficult now to get people to understand that or believe in that.
Yeah, we've definitely moved into a much more fluid work structure. I was ahead of that game for many years, working from home for a startup company. So I was already, living my life on Zoom meetings before that whole thing happened to the rest of us last year. And what I do see being very demotivating for people is, how do I find a center or create a structure when it just seems to be a lot of random chaos, which kind of reinforces the need for it, where no structure may exist, or where we might be, it's very enticing to think that we are at effect of all of these external forces we cannot control. What are the small little wins we can control? What are the small little, what is the least amount of ground we could take each day for ourselves that kind of sets us up to not only survive this kind of crazy time in history, but to thrive during it. And it's something I had to learn firsthand in writing my book. I had every reason to be terrified that all my clients would cut their coaching budgets, and I'm an owner of a small business, but I doubled down on the faith of, if I figure out a way to wake up every day at 5:30 in the morning, get my writing done, serve my clients to the best of my ability, be available to them between sessions to just support them during these wild times, that maybe there was some light on the other side of it. And it turned out to be the case.
You sound like a life coach.
Yeah, it's the work that shows me I didn't choose it.
That's interesting. Look, as I said, it's been a tough year for a lot of people. I think just the idea that you can actually start looking forward to something in a new year is probably positive enough. We'd all like to put this one, file it away and never have to look back at it. So maybe that in and of itself is reason enough that people will start to look forward and think, yeah, things are going to get better.
Yeah, one of the questions I asked in the book that I think is pretty empowering was, is looking at these crazy times we live in, what has this last crazy 12 months, 24 months, whatever it's been for you, what has this prepared you to show up for next year? And, the cop-out would be to say, I'm just going to go fetal ball and not leave the house. But there's probably a deeper meaning there. And I think that this is at the core of why so many of us are changing careers and optimizing towards more meaning and fulfillment. We feel that it is time to serve some sort of bigger purpose or to have some bigger impact on others in a way. And that to me is really inspiring. It's outside the conversation of what's the better money, the better title. And, the more clients I talk to, a lot of them are paying attention to that. So I think there's a lot of reasons to be hopeful right now, and that all of this is, all these forces humanity is facing are bigger than us, but we could find our place in it and help one another out along the way.
Yeah, there's a positive message. Yeah,
that
absolutely.
Sounds great.
Listen, I want to thank you for your time this afternoon. Very much appreciated, Mr. Carter. Thanks.
Thank you so much for having me. I appreciate it.
Christopher Carter. By the way, Christopher, are you still there?
Yeah.
Kristoffer. Is that how you spell it?
Yeah, see, this is me overcoming adversity from the very beginning of my life. My mom wanted to give me the hippy-dippy Scandinavian spelling, so everyone says Christopher, but which is fine. I'll take either, but most people just call me KC by my initials, including my own kids at this point.
I like
Good
that.
enough. I think that's great. The book is called Permission to Glow. Christopher Carter is the author. Thanks again for your time. Appreciate it.
My pleasure.
All right.
Thanks so much.
You're listening to Aaron Rand and Natasha Hall on the iHeartRadio Talk Network.
Now an update from the CJAD 800 Traffic Center.
Metropolitan eastbound just after DeCarry, 2 right lanes blocked by an accident. Be cautious over there. Maybe you want to get off at the Côte